Back to the Denver Radio Real Estate Show. I'm Cheryl Garlock with Colorado Front Range Properties, and my guest today is Chris Sadra. I don't know why I get stuck on this A thing in your name. I constantly do, and God, I've known this man for a long time. But you know, it's just one of those weird little things.
It's only 5 letters.
I know. Maybe that's the problem. You know. Anyway, also known as Chris Z. We've truncated his name there with Homebridge Financial Services there. And you know, Chris, we were just talking about reverse mortgages, and my whole point in that whole scenario was to be sure to be able to go ahead and plan. And a lot of times, as you well know, I mean, both you being in the lending industry and me being in the real estate industry, planning is not the one thing that a lot of people do too well. And that's really what we want to talk a little about here today, is about planning.
You know what's funny is they say people actually plan their vacation, spend more time planning their vacation than they do their life.
You know, I believe that. I really do believe that.
That's a scary thought.
It is. I think I must be an oxymoron to that, because I do spend a lot of time planning.
Me too.
My husband teases me about planning for old age. And of course, this is what I've been talking about a little bit here today, about looking at your options and planning. So, I mean, if you're in that baby boomer stage, or, getting ready to get that direction, you really have a lot that you need to start thinking about and exploring, because I'm going to tell you right now, you're going to need income when you're 85. There is no ifs, ands, or buts. It's called where are you going to get it. That's exactly it.
Right. Absolutely.
And that's where the reverse mortgage happens to fit in. Also, some investment property happens to fit in. And then there was one other little key component to that, which of course I'm not an expert in, but long-term care insurance also fits into play there. But that's expensive.
Yes.
It's very, very expensive here these days, but that doesn't mean that you don't apply for it and look into it. You maybe get a smaller policy, and you sort of spread the risk around.
Correct.
Isn't that what the lenders do in the world? They spread risk around?
They spread the risk. And, actually, I've had some folks, that have taken that reverse mortgage and obviously worked with their children to supplement the payment for that long-term care insurance. So, the children are helping.
That's right.
Because I'm part of that Oreo generation, they call it, where you're kind of stuck in between mom and dad and your kids, and you kind of get sandwiched, if you will. And so, where we've seen a lot of folks help their parents is that reverse mortgage happens, and then that way, they're not having to worry about paying thousands and thousands of dollars if and when they ultimately do go into care.
Right. So give us a call. You can reach me at 720-373-0654 if you want to know how reverse mortgages work with the whole idea of real estate planning, that sort of thing. Chris absolutely is a great person to call about that and so many other lending things. What is your phone number for everyone to call you at, Chris?
My phone number is 720-515-4449.
Now, since we're talking about this whole planning gig, we get a lot of people who, young people too, who are renting right now, and they just are sort of trapped in the renting mode, or they think they can't buy.
Right.
They don't even know where to start. I know personally, because I get a ton of inquiries about rent to own. We're going to talk about that in a second here. But really, there are a lot of options for people out there, are there not?
Absolutely. We're talking about planning, and it's the same thing holds true with when you're getting what we call a forward mortgage. So you got the reverse mortgage,
right? You
got the forward mortgage, and so
that's really what everybody typically gets, is the
correct.
forward.
The forward mortgage, or what what most people are used to hearing the word mortgage associated to. But we've been talking a lot over the last couple months as we've done the show about myths in the mortgage industry, and some of the things we talked about a little bit on the reverse mortgage side. There's some myths. There's a ton of myths on the forward side, and one of the things that we hear a lot of people, and the myths come from old rules most of the time. Okay, so like one example is a lot of people, I still hear this today, and it blows my mind that I've got to have 20% down.
Oh yeah, in fact, I'm not sure, but I think that NAR had done a study of how many people think that they need to have a lot of money down, and I know they broke it out by age group there, but there were a significant number of people that thought that they had to have 20% down, and a significant that thought, okay, maybe 10. But very few knew that there were even programs for as little as $0 down, or even $1,000.
Yep. And there's lots of programs out there. I mean, the government programs, which would consist of FHA, VA, USDA, which is for rural areas.
Right.
Those programs are typically going to be your least money down. USDA and VA, if you're a vet, you can put as little as no money down. FHA typically is going to be 3.5% down. And so, what I always tell people when they're looking to save cash, is you're going to take your down payment plus roughly 2%. So like on an FHA loan, I always tell people they have to have about 5% of their own money to be in a kind of a perfect situation. A conventional loan technically is 5% down, but there are some bond programs out there that will let you go with 3% down. So, same rule in that, in that world as well. And really, it kind of goes into the second piece of what I want to talk about is credit. That's another myth. A lot of people think, they have bad credit and they really have good credit, or they think they have great credit and they have terrible credit. Really, unless you are really keeping tabs on that, and not so much through the various commercials that we see on TV for the credit karma. Yeah, those types of services.
Yeah.
Because those are consumer scores, and we've talked about this in the past as well. There's really a couple different models that they use. There's a consumer model, which is going to show the highest scores out of all of them. There is a credit card model, which again, because it's usually a smaller amount. There's a car model, and then there's a mortgage model. And the mortgage model obviously is the most restrictive of the group.
Because that's the highest risk.
Absolutely, highest risk, biggest dollar, and so. What people have to understand is the best way to find that out is just talk to a lender. Most lenders will, do a no obligation pre-qualification. You can see what your credit looks like, and I probably can't even count on every finger and toe that I have how many times I've had somebody that's qualified when they didn't think they did.
I'll bet absolutely there. And there are actually ways of helping these people out too, but you really do. You need to call Chris. I want you to tell everyone that phone number again, Chris, that they can call you at again.
It's 720-515-4449.
Okay. Well, that's really important there, because there are a lot more people that I encounter all the time that think they cannot qualify. And maybe their credit score isn't quite right where it needs to be, but with a little work and a little effort, it can be there. And I'm sure that you have connections, Chris, with people who can help them with their credit.
Absolutely. And in some cases, it's getting a credit counselor involved, if you will.
Yeah.
But what's kind of interesting is a lot of cases it's not. We can actually run a model. Technically, I can't help somebody repair credit. That's against our rules.
Right.
But we can actually run a model and say, okay, pay this debt down to X, pay this debt down to Y. And if we do that, it's going to give us roughly, so many points of improvement. And so, most people, as long as I can get them to a 620 with their credit score, and the scores are 350 on the low end, 850 on the high end, 620 is usually somebody that's had a few bumps. FHA is okay with that.
Yeah. So, don't take your last credit report that you had for gospel either there. You really probably need to work with a fairly fresh one.
Credit reports are like pictures. The second that you push the send button, just like when you push the picture button,
yep,
that's exactly what pulls up, and that credit report could look different tomorrow if a bureau happens to report to it.
Wow. Well, that's so interesting there. We could share a whole lot more information with you, but, really quickly, do go to denverrealty.com and click under the Search Homes tab there. You'll see a rent-to-own program there. We've got an event coming up here that's called What You Need to Know About Rent-to-Own Programs, and we're going to be able to lay all this stuff out for you right then and there. Now, stay tuned for more from the Denver Radio Real Estate Show, because Chris and I have got some properties that we want to showcase with you and tell you all about. So we'll be right back in just a minute.